Aussie dollar bonds. I always get a laugh looking at this. This is like the monthly, going back till Adam and Eve. I mean, honestly, reserve banks, like, all they've done, right? Since I was, well, actually, not since I was born, right? I was born back here, right? Somewhere in there, somewhere below these things, before these things existed. All they've done since I was a boy, right? Since I was in high school, 1981, right? All they've done is cut rates, right? They just cut rates. People think they raise and cut rates, but no, right? They just cut rates. The reason they do that is because in Australia, they cut rates, everyone gets a bigger mortgage, and they can't raise them back to where they used to be because the windows would explode, right? When I started working, it was in 1989, right? The 10-year rate was up at what's that, 13, 14%. Right? I was getting 16% on my cash management trust. These days it pays zero, right? So it's not that houses are worth more, it's just cash is worth less. Anyway, and a hobby horse, right? Where are we? I've had a little bit of a little recovery as continued. And I, where it came back to earlier in the year, it could well come back to there again. It kind of has a habit, right? You can see it has the low, bounces off it, comes back, loves it a few times and leaves it, creates a new one. So this one, when it comes back here, I suspect it could chop around really kind of in here. This is that breakout point when we go in closer. It could chop around a little bit more. So that level there, where it came down to, that's the breakout when it had that spike up earlier in the year, back in March. So I suspect it could do a little bit of chopping in around here. This trend line is what I've got my eye on, along with the breakout from here and there. They're the levels I'm watching. So first stop on the bus for me, I'm short the bonds, long the rates, right? Is going to be this level here, which that'll be something I'm a little bit wary of in terms of it turning. But for me, I'm a long-term seller of this. I really think in 3-4 years' time, we're going to look back and say, the 10-year rate down at 60 points, 59, 60 points. We're going to go, that was insane, right? Just as, when I look back now and back to 1989, I think I was getting 17%, 16% on my cash management. I was going, that's insane. At the time, it was great, right? Just as being a borrower now, I think it's great, right? But I think we're at some real extremities. Just as we're at some extremities there in terms of high rates, with there was a recession coming up in Australia, in the 1991, which is when rates really spiked, the cash rate. You see it more on the cash chart rather than the long-term bond rate. Just as we look back now, I think those levels were insane. We're going to look back, I suspect, at these levels where we are, so we're certainly where we have been and where we are now, going, that was just insane. It is a bit of there's a big call in a way, right, for it to break this line, because as I said, when you look at it for the last 40 years, there's only so much the Reserve Bank can do in terms of raising rates, because they've fed everyone the drugs on the way down in terms of bigger mortgages, and they've basically zugwanged themselves, right? They can't cut any more. They will start getting worried about asset bubbles, although they say they're not worried about the housing one. The only reason the housing prices at the moment aren't really a bubble per se is because rates are so low. Right? When you look at the affordability, if you take into account incomes and interest rates, right, houses actually aren't that outrageous. The deposit's the problem, different story. So that's the bigger picture. So for me, when I look at this one, it's always like a big, longer term thing. I'm hoping really to kind of rake it in if it breaks this and inflation genie comes out maybe, and finally they start to renormalise rates. I don't, for them normalising it, that would be extreme, right? So there's not going back to 10, 12%, not in my lifetime, but I can certainly see them coming back to here again, very easily, and I can see it coming back to here sometime. In the meantime, I do have my eye on what could happen, particularly down here. If it comes down, I'd probably load up again here, actually, get shorter here and ride it. It could be a bit of a range trade for a little while. But that range trade will start coming up against this one, and that will be an interesting proposition. Where it is now, it's a bit tricky now to say whether it's a good buy or a sell at the moment, because it is right in the middle. This 130 range, you've got like 60 points up to that previous high, right? 50 points, and you've got like 50, 60 points down here. So it's a bit of a one for one. Not a great trade to get into in terms of this range, which is where I think it could well be, if not this lower range, right? For a little while. Okay, catch you later. Ciao.